Hello, everyone. Thank you to all who have joined to hear an update on Beneficient, or Ben. This is Jeff Welday with Ben. I'm the global head of originations and distribution. So what I wanted to do in the time that we have together here is provide a high-level overview of what Ben does, who we do it for, and how we do it. And as I go through my comments, I think you will quickly come to the realization that we hold the belief that we're equipped to ultimately solve a massive problem in the industry that's growing larger and larger by the day. And we're rather unique in that we're the one of just only a few providers in this space that does what we do with some significant moats around the business. And I want to spend a few minutes just talking about all of that. So let me jump right into the presentation. So we've spent a number of years building out our platform. And when I say our online platform, you're going to hear me refer to that platform as Alt Access. That's just our proprietary name for the technology platform that we've built. It's a technology platform, the first of its kind in the industry, but there's two very important things for owners of alternative investments that I want to highlight. One, we provide liquidity solutions to owners of private market illiquid alternative investments. Importantly, when discussing the liquidity that Ben may provide, I mean liquidity the Ben way, and you'll see that referenced on our website and on marketing materials. And when I say that, we've built a rapid, secure, online way for customers to exit alternative asset investments for cash, equity, or debt securities based on the customer's individual liquidity needs. And when I say owners of private market illiquid alternative investments, think of traditional investments such as private equity funds or private credit funds or infrastructure or private real estate. And we'll talk more about what assets and vehicle types qualified for our platform and offering investors potential liquidity out of those prior to the stated exit date. That is written into the limited partner agreement. And in addition to that, we also work with general partners that are capital raising, given that's an incredibly challenging fundraising environment for general partners, and I can speak more to that here in just a bit. We've recently launched a product where we finance primary capital commitments into funds that are fundraising by leveraging our balance sheet. And again, I want to talk more about how we believe we are uniquely built to solve that problem for fund sponsors as well. So let me just jump into some of the data and just make the case for these pain points that we see are evident in the marketplace. They're growing rapidly, and how we believe we are uniquely built to try to solve these pain points for the industry. So moving from left to right on the slide, you should see two charts. And the one on the left is just simply showing the growth of alternative investments globally. And this is a trend that's been underway for some amount of time. Our belief is this trend will continue to persist well into the next decade or two. Global alternative investments currently sit around $15 trillion. Some professionals in the industry believe that we will go to $25 trillion in the next 10 years. And that's in large part because obviously large institutions have allocated to alternative investments for many, many years. I put foundations and endowments into that category as well. And what is fueling this next wave of growth in alternative investments is the adoption of alternative investments within individual ultra high net worth, mid to high net worth investor portfolios. And what we often refer to, or what the industry is referred to as the democratization of alternative investments. This is the growth for which our business model was built to try to specifically address. The yellow line on the chart is simply showing how global secondary transactions have tracked very nicely to the growth of global alternative investments. And global secondary transactions, if you're not familiar with what that is or what those are, that's essentially how large institutions obtain liquidity or how they exit their alternative investments. Clearly, they have been allocating to alternative investments for some period of time, and the secondary marketplace has been the marketplace by which these larger institutions have been able to obtain liquidity for a variety of reasons, whether it's to rebalance a portfolio or gain exposure to a different asset class or industry sector. The secondary marketplace helps facilitate that. And it's an important marketplace for us to look at because it's a proxy for understanding our business model and the target markets that we're aspiring to serve. Although we're focused on individual investors that might be looking for liquidity, or small to mid-sized institutions. Again, we would define small to mid-sized institutions as endowments and foundations. This is a very important proxy for us, the secondary marketplace, because as you can see, the growth of alternative investments has a very high R squared or correlation in the growth of overall demand for and marketplace for liquidity. And I'll come back to that in just a minute. The second main product that we have, which I referenced earlier, is the primary commitment program, where Beneficient is financing primary capital commitments or investments into funds that are capital raising, not only providing liquidity to funds and to limited partners. The goal is to really help serve as a catalyst for capital commitments into funds that are fundraising. And again, I'll come back to that here in just a minute, but the slide on, or the graph rather, on the right just illustrates how fundraising has continued to grow as alternatives have grown globally, as we just demonstrated with the chart on the left, and how it has this appearance of just a significant drop off here over the last year or two in fundraising, as the fundraising environment has become increasingly challenging for a variety of factors. So I do want to maybe put a finer point, though, on the total addressable market that Ben is targeting and aspiring to engage with. There's a lot of data on the slide on your screen. I don't need to go through it all. You're more than welcome to go through this, given that this presentation is on our investor website. I do want to highlight just a few headline numbers on the bottom bar charts, though. Again, moving from left to right, you see $13.7 trillion at the bottom of the left bar. That is, again, the number that I referenced on the previous slide bar chart, just global alternative investments. But what we've done here is broken it out into three distinct customer segments. Large institutions hold the majority of it at $11 trillion. As we just talked about, large institutions have been allocating to alternative investments for many, many years. Really kind of the first or early adopters of alternative investments. Small to mid-sized institutions hold about $1.4 trillion. And then you can see high net worth individual investors currently hold about $1.3 trillion. And this is all just net asset value, just for clarification purposes. And just in the US for those two figures, small to mid-sized institutions and individual investors. The gray bar and the medium blue bar specifically is what those are referencing. Then to the right of that, you see some arrows with some percentages. The 1.3% is a known figure. That is what large institutions on average have been transacting in the secondary markets. In 2023, they transacted approximately $139 billion. 2024 is anticipated to be a record year for the secondary marketplace, potentially eclipsing $200 billion of liquidity transactions. And the forecasts for where the secondary marketplace could go over the next 5 to 7 years is well above that $200 billion figure. And what we have provided is a couple of assumptions on the turnover rate for our target markets, the small to mid-sized institutions and the individual investors. If individual investors and small to mid-sized institutions had the ability to obtain liquidity, or in another way, receive an early exit from their private market alternative investment, how much of it would they look to turn or sell? It's a pretty interesting question, and quite honestly, not one that you can find much research on, and not one that's really been deliberated by the industry for good reason. To our knowledge, there hasn't been a pathway or a mechanism by which the average individual investor is able to conveniently and in a simple, rapid way sell their holdings in alternative investments. And so that's where we've come up with these assumptions. And you'll notice the assumptions of the anticipated turnover rate are a little higher than what they are for large institutions. And we at Ben believe there's good reason for that. Often large institutions are selling their alternative investments to other buyers, other large institutions, or a secondary fund to try to rebalance a portfolio. Or maybe they want to get exposure to a different asset class, maybe move out of a particular asset class into a different asset class. Maybe into a different fund sponsor or manager, or into a different vintage year. A variety of reasons that really, quite honestly, have a lot to do just with portfolio construction and a general investment strategy of the institutions. Well, we at Ben believe individual investors would do the very same thing if they could. And those three words are a key phrase, if they could. They just have a hard time doing so. To our knowledge, there's no efficient marketplace. There's no exchange specifically structured for individual investors to get early liquidity like large institutions. That secondary marketplace was built by and for large institutions. Those tend to be very, M&A like type deals. And so the reason our assumptions have gone from 1.3% up to 2.8% for individual investors is what individual investors have that large institutions don't have are life events, a death in the family or a divorce, or maybe I own a small business and my small business needs free cash flow to invest into the business, and my alternative investments can now provide that source of capital. Generational wealth transfer. These are things that individuals experience, institutions don't. Yet individuals also, if they could, I believe, Beneficient believes, would take advantage of liquidity or the ability for early exits to rebalance portfolios and think about portfolio construction in a more agile way than what they've been able to otherwise. And so we've applied these assumptions and come up with the middle bar and to estimate what the annual demand for liquidity would be. And you can see with our two target markets, individual investors as well as small to mid-sized institutions, we estimate average aggregate demand of over $1 billion annually. We estimate that in 5 years' time, that number grows to over $100 billion annually. So the growth rate is being driven by the growth in alternative investments, quite simply, again, which we demonstrated on the previous slide, that as alternative investments grow, this pain point continues to grow as well. And we expect, if there was a pathway for early exits, that you would see commensurate growth, much like you've seen in the secondary marketplace. So it's a really large and rapidly growing marketplace opportunity. Yet to date, again, to our knowledge, no provider of liquidity has successfully tapped into this marketplace. And there seems to be a lot of reasons why. And I want to unpack Beneficient's platform and business model to explain how we're attempting to address what I would call friction points. These elements that exist that have prevented marketplace participants from being able to achieve liquidity at scale and the potential dollar amounts that we're talking about. So as I said before, pretty wide range of alternative investments that we are built to provide early liquidity for, or an early exit for an owner of alternative investments. And I don't need to go through all of these again that are on the slide: private equity, venture, private credit, infrastructure, real estate. It's a very long list of asset classes, but importantly, also a very long list of product types or vehicle types that Beneficient is designed to work with as well. You can see the gray bars reference how we can and have provided liquidity products for non-traded products, or for feeder funds, or for fund of funds and separate accounts, and so on and so forth. So again, a wide variety of vehicle types. And then the bottom honeycombs just highlight our various products and services that we delivered to recipients of this liquidity, which again, I'll come back to in just a minute. I think the important question is, how do we do this? So how has Ben come to market with something that is designed to deliver on this mandate of a secure, rapid, cost-effective approach to liquidity? Just to reiterate, as I said before, massive total addressable market of alternative investments that you may have owned for 4, 5, 6 years, and for whatever reason, you want to get out, and right now you really have little, if any, optionality to exit that investment. And by the way, I should have mentioned on the last slide, the minimum liquidity product amount for Beneficient to work with is $100,000. But here's how the platform works. And I'm not going to be able to go into all of the details of it. Happily, we can talk offline. A representative from Beneficient can talk offline to explain more specifically how the platform and program works, and in fact provide a demo of the Alt Access platform. I had mentioned at the beginning of my remarks that everything we do is built on this proprietary technology called Alt Access. And Alt Access, think of it as you would any financial services relationship that you have, where you open up an account with Ben, much like you would with any commercial bank. And in that account, we will begin the process of transacting with you, where you provide to Beneficient all of the underlying and required documents that we need to properly underwrite and value the fund interest or interests, the portfolio that you currently own. Again, it is designed to be just a drag and drop environment where you're providing us with those fund documents in a safe and secure manner and fashion. When we receive those fund documents through our online platform, those will be provided to our risk and underwriting team and other internal departments within the organization. Then we go into our process of determining what the value is of that portfolio. That we would come back to you in the form of a proposal that, again, is delivered to you online through your account on Alt Access. I don't have time to walk through the mechanics of how we value and price the portfolio. That's a really important part of the business model, but and we're happy to go into the details of it. What I can tell you is that to date, we've transacted on $1.2 billion of net asset value with a B. In fact, I'll show you a slide here in just a minute that highlights that collateral portfolio and its breakdown by asset class and industry sector and other various metrics that we track the collateral portfolio on. And you'll see that we get exposure to this diversified collateral portfolio that we've constructed through a methodology that we call Optimum Alt. And that creates a diversified collateral portfolio of alternative investments that collateralize our liquidity financings, again, built through our liquidity business or secondary business. But back to this online transaction, the process designed to come back to you in a matter of just a few weeks with a proposal. You could accept the proposal online. We would then send you standardized closing agreements and transaction documents all online. And you'd be able to sign through DocuSign, and we close the transaction. And we deliver to you the consideration type that you selected via the initial proposal in exchange for your LP interest or interests that collateralize Ben's financings after closing. And everything that I just described at a very high level, admittedly, there's a lot of underlying detail to the Alt Access platform, but everything that I just described can be done with an individual investor directly with Beneficient, or we've built Alt Access with the intent that it would be highly scalable to the industry. What do I mean by that? Well, Alt Access was built with the idea of potentially white labeling the software and delivering it to any private wealth firm, from a small RIA firm to one of the largest global private banks or broker dealers or private wealth platforms that works on a global scale. You can think about any number of firms, right? Randomly, just a Morgan Stanley or a JP Morgan Chase or a Citibank, or again, you name the RIA or private wealth firm. If you think this platform has relevance to your practice, to your advisors, and to your clients, the intention is to have Alt Access able to be delivered as a private label experience through various API options to your firm. And that is intended to work, again, not just on the private wealth side, as I just said, but also with general partners as well. So what Alt Access does, though, importantly, behind the scenes, is create, as I said before, a rapid, cost-effective, secure process to delivering liquidity to the seller. And what this slide now is showing you is, on the right, what traditional liquidity providers typically do in a standard, regular way, secondary transaction. Again, what I referred to earlier in the presentation is a more typical M&A type transaction. And I'm not going to go through the detailed steps with this, but you can see, importantly, that oftentimes it can take 9+ months for a typical liquidity transaction to conclude from end to end. And again, a lot of good reason for that, but these transactions have typically been with sophisticated investors, both buyers and sellers, that have the resources, have the time to wade through the complexity of these secondary transactions. With Alt Access and various other enhancements and developments that Ben has created as a pioneer in this space, we've built our system to try to reduce that process down to as short as just a few weeks. Again, all online. And so now what you're looking at on the screen is the collateral portfolio, as I referenced before. These are the existing liquidity financing collateral portfolio that we have built here at Ben through this secondary or liquidity business. Currently 252 funds diversified by geography, by asset class, and by industry sector. And within those funds, a number of very well-known private companies and interesting, well-publicized spaces that a lot of investors would currently be clamoring to get ownership for if they could. Our goal is that every time we provide liquidity to a market participant, an individual investor or small to mid-sized institution, this collateral portfolio grows and becomes a bit more diversified. And then lastly, just a quick highlight, excuse me, of the management team and board of directors, which was in large part why I joined Beneficient 5 years ago after 25 plus years in the industry working for very large, global, well-known, established brands in financial services and investment management and related to alternatives. This team has been together for a number of years. As I said, I joined Beneficient 5 years ago, and the majority, if not all of this team was in place for 5 years or greater. And in some cases, you're looking at individuals on the leadership team that have worked together for 20 plus years. So a very well established, experienced management team, deep domain expertise across their various verticals, whether it's finance or technology or legal and compliance or risk and underwriting or origination, sales, marketing, so on and so forth. And then I'd also highlight the board of directors, again, notable in their own right and respective areas. So in closing, let me just reiterate and finish up where I started. And that is, you know, these competitive strengths or differentiators, if you will, for the business. Clearly, our intellectual property and technology that I've talked about in some detail here, alt access. We built our business to try to take a transaction that takes anywhere between 9 to 12 plus months, and we've reduced it down to just a few weeks. We designed our system and technologies with the intent of handling potentially high volumes of transactions, meaning low dollar amounts, $100,000 minimums, as I said before, and potentially high volumes of transactions as investors realize that they can discover an early exit from their alternative investment that they thought that they were locked into for 10, 12 plus years. And as we start to introduce this technology onto various private wealth platforms, we're excited at the potential adoption and belief that liquidity should sit alongside, anywhere where there's a primary offering of alternative investments, that investors will desire and like to have liquidity options. Being publicly traded and having our public equity as a currency, we believe is really interesting and creates interesting optionality for us as a business. That's one of our core products, is when a customer wants to sell its LP interest, Beneficient can either finance that transaction either for cash or by issuing equity from our balance sheet. So importantly, I want to reference the disclosures on the slide. Please feel free to read through that. Important that you understand all the risks associated with Ben and the various disclosures of the company. Again, I would remind you that this specific presentation resides on our public website. The various links here on the screen where you can access not just this presentation, but all of our public filings, as well as information specific to the business. And then lastly, at the bottom, we have an interesting tool and technology called Alt Quote, and you can actually get a quote, an indication of value on a portfolio of investments that you may currently own. You may not even want to move forward with getting full liquidity on that. Maybe you simply want to find out how much potential value could you get if you worked with Beneficient. And Alt Quote is our tool that we've introduced to afford you that optionality, if you will, the benefit of insight of understanding, if I were to sell, how much could I potentially get for this transaction. So again, I just want to thank you for your interest in what Beneficient is doing. We're excited about the business, and in 2025, further growing the business, introducing the business to our key target markets. And as I mentioned before, please reach out directly to us if you have any questions or would like follow-up information. Thanks, folks.